Hello traders and welcome back to the Forex Geek. In today's video we're going to be talking about the Evening Doji Star candlestick pattern, and this is a powerful 3 candle formation that signals potential market reversals. So in this video you will learn how to identify this pattern, you will understand its psychology and execute trades when you spot it on your charts. So this pattern works across all markets and time frames, and by the end of this video you will know exactly how to add it to your trading arsenal. So without wasting any much of your time, let's get started. The Evening Doji Star is a 3 candlestick reversal pattern that forms at the end of an uptrend. So you think of it as the market's way of showing exhaustion after a strong move. Up actually. So let's break down each candle that makes up this pattern. So the first candle is a large bullish candle with a substantial body, showing strong buying pressure and confidence in the current uptrend. This is the first candle right here, the strong bullish candle. So this represents the final push of the bulls. For a valid pattern, this candle must be at least 2 to 3 times larger than the average candle size in your time frame. So the second candle is our star, and that is the doji. So it must gap above the first candle's closing price, and the key formation criteria here, the opening and closing prices should be within 1 to 2 pips of each other. The doji should have minimal body size, and the gap must be visible and clear. So this is the gap right here between the closing price of the first candle and the opening price of the second candle. So that signals a gap. And the third candle confirms the reversals with specific criteria. It must be a bearish candle. It should close at least 50% into the body of the first candle. So this is the 50% of this candle, and you can check that using your Fibonacci from the start of the candle to the end of the candle, from the opening to the close, and this is the 50% right there. So the third candle must close at least 50% into the body of the first candle, and the trading volume should ideally increase, showing strong selling pressure. So the candle should be at least as large as the first bullish candle. So remember, all 3 candles must form within 3 consecutive periods, and any gaps between them invalidate the pattern. So this is exactly how it should look like when you hop on the charts to find the pattern. So without wasting your time, let's get into the charts. Let's find this pattern, the Evening Doji Star candlestick pattern. So this is Ford stock, and this is the pattern right here. You can see the first candle showing enough bullish momentum, the second candle, which is a doji, and the third candle, which is closing way below the 50% of the first candle, even closed below the opening of the first candle. So you can see the gap. You can see the gap between the first candle's close and let me just zoom in. The first candle's close and also the second candle's opening. There is a gap right there, and that is enough validation. So this is how it looks on the charts on the live markets. Let me find another example. So this is another example of the Evening Doji Star candlestick pattern, and you can see the first candle, which is this bullish candle, and the doji, the star, and the third candle closing well below the first candle. So that is exactly how it should be. This is the Evening Doji Star candlestick pattern. So I think I have one more here. Okay, look at this one. So you can see this gap between the first candle and the first candle's close and the second candle's opening, and that is a doji candlestick. And you can see the third candle closing 50% into this first candle. So we want to check 50% of this first candle to know if this pattern is a valid one. You just put it right here and zoom it into this. You can see the 50%, which is here. That is the 50%. And I'm just gonna delete this Fibonacci. And you can see this is the 50%, and the third candle closed below the 50%. And I'm showing that this is a valid evening doji star, and we should be looking for selling opportunities in the market. So how can you use this candlestick pattern to trade? We've identified it. Now that you understand the evening doji star candlestick pattern, let's discuss how to trade it effectively. So your entry point, your ideal entry, is after the close of the third candle. So this confirms the pattern and reduces the risk of false signals. So place your sell order at the open of the next candle following the pattern completion, and sell order should be here. And your stop loss, to manage risk, you should place your stop loss just above the high of the doji candle, which is right here. And if the price moves above this level, it likely invalidates the reversal signal. So your take profit, for your take profit, you can set up your profit targets based on previous support levels. A consecutive target would be the most recent swing low. So for more aggressive trades, you can aim for lower support levels or use a risk to reward of at least 1:2 risk to reward ratio. So this right here is the recent swing low. So if you're to target if you're to target there, you could be having this trade with a 1:4 risk to reward ratio, and or you could target a 1:1 or 1:2 if you are a conservative trader and you don't want to take much risk. Also, you can see this is a level that price might respect, and you can also see this is another level price should respect. So these are levels you can set your take profit your profit targets. And let's look at this. Let's look at this example that we had here. Just gonna exactly. So as we discussed, the entry should be at the close of the third candle and the opening of the next candle. So entry right there, stop loss above the doji, and take profit could be 1:1 or a 1:2. Or you could target significant swing lows or support levels. In this case, we don't have any support level looking on the left, so we'll just target a 1:1 or a 1:2. And that is it for this trade, for this example. And let's look at this example we had right here. So for this one, remember the confirmation. After the confirmation here, the entry should be at the opening of the fourth candle, stop loss just above the high of the doji, and take profit should be at this swing low. Or if you are an aggressive trader, you could target this low right here, or you could target more significant lows, or if you are not, you could maybe just target 1:1 or 1:2 risk to reward ratio. Whichever one works for you is fine. And the main thing is to get the actual candlestick pattern and not to make any mistakes with the formation or with the identification. So another thing to look out for is the volume confirmation. Look for increased volume on the third candle of the pattern. So higher volume on the bearish candle adds credibility to the reversal signal. For example, let me look for a good one. You can see this for this trade that we had right here. You can see the volume, the corresponding volume of this third candle is a very there's significant selling volume right here, as you can see, and it's way significant that the buying volumes that we had previously. These are buying volumes we had previously, and you can see there's enough selling volume showing that sellers might be entering this market right here. So that is another confirmation. And another thing to look out for is time frame confirmation. So always check higher time frames for confluence. An evening doji star on a daily chart carries more weight than the one on the 5-minute chart. So align your trades with the overall trend on higher time frames for better probability. So remember, no pattern works 100% of the time. So always use proper risk management and combine this pattern with other technical indicators for the best results. So, alright traders, we've come to the end of today's video. If you found this video helpful, please hit the like button and subscribe to our channel. Turn on the notification bell for more trading insights. And thank you for tuning in, and until next time, happy trading.